Good morning. Good morning. Welcome. Thank you for joining us. Oh, I see we have 4 people already who have joined us for today's webinar. My name is Yvonne Efe. I'm Propcom Communication Manager. Sorry about that. Today's webinar is the last webinar in a series of webinars we've been hosting to provide insight into the Propcom program. We will basically be talking about some of the approaches that we've used working with our partners to help drive access to finance for smallholder farmers in northern Nigeria. To tell us all about it, we have 4 speakers, 2 of whom are partners. So I will start with them. We have Mr. Ayodeji Balogun. He's the Chief Executive Officer of AFEX Commodities Exchange, And then we also have Mr. Abraham Asongo, who is the Head of Credit at Standard Microfinance Bank. I wonder if Mr. Asongo and Mr. Balogun can please turn on their video so our audience can meet you. Thank you very much, Mr. Asongo. We also have our very own, welcome, you're welcome, sir. We also have our very own Ruskiat Batmos and Ovo Weber, who are at Ruski is the technical lead on access to finance, and of course, Ovo is our deputy team leader. We will start the webinar by discussing giving an overview of Propcom basically, and then we will go into the context in which we work. Then we'll talk about the approaches that we use to help farmers access financing. This is where the meat of the webinar starts. We will then pass on to our partners who will give us, a good in-depth view of their experience working with Propcom, and of course, they'll give us a brief overview of their organizations as well. We will end the webinar with lessons learned and opportunities. Right, so before I hand over to our first speaker, please remember to use the question and answer feature to post as many questions as you have while the webinar progresses, and we will address them at the end of the webinar when all the presentations are done. Right, so we're going to move on to about Propcom, and I will hand over to Ovo to please take us on. Thank you very much.
Thanks, Yvonne. Good morning, everyone. Thanks for joining us once again. I'd like to start with a very short overview of Propcom. Propcom is UK aid funded. They say 51 million pounds market systems development program aimed at reducing poverty in northern Nigeria. When we say market systems, what we really mean is that we use an approach called the Making Markets Work for the Poor, which essentially focuses on identifying the barriers to economic growth and access for the poor and employing market solutions to address these barriers in a sustainable manner, working with the private sector essentially and other stakeholders that are relevant to unlocking these barriers. We've worked across multiple markets, agricultural inputs, poultry and livestock, warehousing offtake, looking at addressing climate change through climate smart technology and solutions, and then also looking at cross-cutting issues like access to finance that we are discussing today. In the last 3 years of the program, the extension, which we call the extension phase, we've essentially tried to do 4 main things. 1, facilitate economic recovery in the conflict-affected areas. That's what you can see on that slide. We work in the 6 northeast states and 3 northwest states. So essentially just replicating successful business models that we have seen over the first 5 years of the program. Also, we try to facilitate access to climate smart solution, building resilience for this same group of beneficiaries, and then finding ways to drive inclusion, working with partners to promote inclusive business models. Next slide. So far, through our work, through the private sector and other key stakeholders, over 1.2 million beneficiaries have been reached, essentially increasing their incomes, livelihood, and their resilience. And we've been able to leverage 85 million pounds from working with the private sector and other key actors. Next slide. Ruski is our access to finance person, and she's going to give us a bit around what happens in the space, especially around agricultural value chains, financing agricultural value chains. Ruski, over to you. Thank you, Obo. Good morning, everyone. So to give a bit of context about the access to finance environment here in Nigeria, currently agriculture contributes about 24% to Nigeria's GDP. It's also worthy to note that 80% of farmers are smallholder farmers. These are farmers farming less than 2 hectares of land. In the same environment, banking sector contributes banking sector credit is about 4% to agriculture as of 2020. So it shows that agricultural financing is really on the lower side. While AFENA Access to Finance Survey 2020 showed that 35.1 million adults were financially excluded, 48.1 million of these financially excluded are farmers and majorly from the Northwest. So that's the environment that we're working in. And the reasons for this exclusion, it's quite alarming as it cuts across all market actors within the space Propcom played. If you look at institutional exclusion, it cuts across smallholder farmers, it cuts across SMEs. You look at in things such as collateral requirements, products not suiting the SME needs. For smallholder farmers, you look at issues around documentation. While there's also the issue of affordability, cost of financing. All actors within the value chain, within the space, market actors are looking for single-digit interest rate or something affordable that would enhance their business. And finally, one of the reasons for exclusion from the Access to Finance survey was access. This access is majorly bordered around smallholder farmers. I had earlier said that 48.1 million farmers are actually excluded. So this access has to do with how do they reach the financial institutions. So as Propcom McCarthy, dealing with market actors, these are some of the access to finance needs that we identified over the years. There's need for microfinance for smallholder production and trading. We also realized that what SMEs require working capital as well as growth capital. There are assets acquisition financing needs, invoice discounting, tailored financial products aligned with business needs. We saw that most financial institutions were not offering tailored financial products that market actors actually required. And finally, low-cost funds. So these were some of the things that we identified as Propcom McCarthy over the years. I'll pass over to Ovo, who will be speaking as how we approach access to finance as Propcom McCarthy. Thank you.
Okay, so as a program, because our primary focus is really addressing the needs of the poor, but working through actors. In other words, getting actors to change their behavior in a way that it improves the efficiency of transaction and increases transaction. It meant that we would identify sectors, subsectors, and particular value chains that could impact on the livelihoods of the poor, and then try to address the underlying constraints in those chains. What that meant is that we were very opportunistic, in our approach to finance. It would be that, for example, if we wanted to deal with poultry, as we x-ray the poultry value chain and the system around the poultry value chain, we would then determine whether finance is an underlying issue that needs to be addressed. As such, it was intervention driven, and it was essentially just responding to certain needs of either the SMEs or the smallholders, depending on where we see this as a need. And so over the years, we've essentially used multiple tools to try to address the issues of access to finance. For example, technical assistance. We're working with microfinance institutions. We've had reasons to offer that kind of capacity support, where it's not that they don't have the liquidity to offer the finance, it's just that the staff that are engaged require a bit of capacity building, an area where the institution may not be interested in investing because they can't see the immediate returns. And so in certain instances, we've tried to address finance through, offering performance-based incentives. This has essentially been targeted at community-based organizations where it's trying to get them to assume a more commercial role in the market. And so giving them that liquidity that they need in form of performance-based incentive to engage in semi-commercial activity that will drive impact and access for smallholders. In certain instances, I'm just cherry picking right now, in certain instances, it's been the need for crowdfunding. For example, you will hear that later. Well, we will not go into the details of that, but for mechanization, at some point, we found that traditional finance wasn't going to address the need there. Therefore, we had to look for other ways to crowdsource finance at some point, you know, in order to increase the availability of mechanization assets at the pace and the speed that we wanted it to go in order to address the productivity needs of farmers that require mechanization services. We've also used returnable grants. We use returnable grants essentially to drive innovation, where we know that traditional finance will not fund startups. They will not fund an idea that's not tested, where there are no cash flows, where you cannot really say that the business model is proven. So in such instances, we have advanced our own funds as returnable grants. Let me flag the issue of guarantees and bonds. For guarantees, this was essentially something we worked on as a means to prove the case to commercial finance providers, as well as the AFEX finance organization in Nigeria, CBN, that certain businesses are profitable. As such, they need to design a guaranteeing system in order to catalyze finance into that space. Bonds were also used. We used bonds as a means to drive innovation and particularly support unproven business models. Next slide. Essentially, in summary, the summary of this slide is that our funds have been directed to catalyze investment as well as the lending capital. Some of the top 4 or 5 tools that we've used over the years, and we'd like to focus on repo bonds and influencing institutional policy around equity. But we've been able to, through the various interventions, remember I said that, we used, it was intervention-based, it was opportunistic. So over the years, we have worked around stimulating guarantee systems in the country. We've also used returnable grants in certain instances. And we've also tried to use what we call the raise out of poverty bond, ROPO bond. It's not your traditional bond. It's just some type of debt financing that we've given to SMEs in order to get them started on innovation or for working capital to get them to be prepared enough with proven models to get commercial financing. So guarantees, let me give you a bit of context around this. Next slide. Mechanization is something that is crucial to productivity, especially when you look at land preparation, getting the full farm operations mechanized. But what we even tried to do was to try to address land preparation. According to the estimates, all estimates from whether it's FAO and World Bank, the total number of tractors required in Nigeria is about 1.5 million in order to be a fully mechanized farm operations. But in circulation, there's just between 5,000 to 7,000 functional tractors. And these tractors came on board over the last few years, So imagine what it was when Propcom started in 2012. There was a big gap, and most of those gaps were driven by the fact that the asset was not affordable for an individual farmer, smallholders particularly. Therefore, there had to be a service provision model that would drive affordability for them. But for SMEs to run this service provision model, they needed asset financing. What was the situation? There were no products that were suitable for them. Financial institutions required that, there were collateral for those assets that needed to be bought. But underpinning that, commercial banks would want some type of guarantee because of the perceived high risk, mostly driven by a lack of understanding of how the market operates. So what did we do? Next slide. What we tried to do was, let me just flag here that, we built on top of what the earlier program had done, the initial Propcom had done. They had started to test the idea of the mechanization service provision model. and generating evidence on guarantees. So what we did was we worked with the Central Bank of Nigeria, providing technical assistance for developing the mechanization framework under their NICEL program. But in order to do that, we had to prove that if they guarantee tractor loans, it's profitable enough to repay the loans. Therefore, the risk exposure is minimal. So we invested an initial amount, one, to help develop the model, two, get the model to get groups to work on the model. So the service provision model was hinged around associations, Mechanization Service Providers Association. There was TOFAN, and there was another group called TOAN. It was a mix of getting vendors to agree to a buyback, plus the associations that were coming together as SMEs to access the loans, guaranteeing themselves as group guarantee, and then strengthening the model. The initial interest came from FCMB, and in the first instance, Propcom was able to offer guarantee for 50 tractors between 2014 and 2015, and all of these loans were paid. With the evidence generated, this got NICEL to reconsider, and they started with a 10% guarantee. This grew over time to about 75% with an interest drawback. The interest drawback, of course, is supposed to allow, encourage borrowers, SMEs that are borrowing, to repay as well as take more loans in order to increase their operations. And through this period, we've seen several banks pick up these NICEL guarantees thanks to the CBN. FCMB, first movers, Sterling, Access Bank, and a host of others. Next slide. So the ROPO bond, sorry, we did not put it in full. ROPO bond is what we describe as a raise out of poverty bond. It's just a product that was developed by Propcom. And the reason why we did this was to catalyze innovation. We needed to help a business that had just started, just at the time Propcom was getting initiated, that wanted to promote an agricultural franchise model, want to get a low risk capital to develop the model. Babangona over the years have been helping smallholders, offering end-to-end solution, meaning starting them off as a group, building their capacity around production, monitoring their farm operations, and off-taking, providing even storage services, and off-taking those grains. They started with maize, giving them access to premium markets like the Nestle's of this world and the rest of them. Through the Babangona model, as it were, more like some type of contract farming with divested risk. Through the Babangona model, farmers that are part of this franchise are able to increase their yield by 2 to 3 times higher than the national average. And of course, net income is also about 3 to 8 times higher than the national average because they have direct access to market, minimizing. Oh, the audio is bad. I'm so sorry about that. I hope you can hear me better. Sorry, still on Babangona, minimizing the buyer, therefore giving farmers that premium that they needed. Again, the fact that we had that bond allowed for Babangona to prove that this is a workable model, and that allowed other capital to flow into Babangona, as you will see in subsequent slides. Next slide. Thankfully, AFEX is here. AFEX is African Exchange. They will speak a bit more about what they're doing, but essentially, we offered the same ROPO bond to give AFEX at the time, who were just trying to start up, some type of liquidity that allowed them drive transaction, because it was about taking grains from farmers and linking farmers to markets. And so they needed that working capital in order to settle as settlement funds for transaction with farmers. And part of what strengthened that model is the fact that they had input financing linked into it, and farmers had all sorts of innovation to sweeten the deal. Deji will speak more about it. So the bonds, in terms of the bonds that we gave to AFEX and Babangona, it was a 7% interest bond that had the opportunity to be converted from debt to grant option based on the social impact and results, social outcomes that we wanted to see from those. Next slide. At the start, when Babangona started, as a result of the capital that they were able to access from Propcom through the Raise Out of Poverty bond, they started with 103 farmers in 2012. And by 2015, when we were looking to wrap up that particular partnership, Babangona was already delivering value to close to 3,000 farmers, with close to 24% women incorporated. And the actual yields, was about 4 times above national average, with I think the income increases was, maybe 3 to 4 times higher than the national average. Post-Propcom, Babangona has been able to leverage capital. In fact, within this time frame, Babangona was able to leverage over $4 million in investment from within the space. I know Acumen put in money, and through that have gone into commercial financing. For AFEX, I would prefer that AFEX speaks on this, but just put out the general information we had in 2 years. Over 13,000 farmers were transacted with that had incremental income. They were able to go into very solid partnerships that allowed the inflow of inputs that gave farmers that robust input required for the type of production and yield that they wanted. And they have continued to be able to leverage capital and raise capital from commercial sources. This is terrible that you can't hear.
Oh, we're hearing you clearly. Maybe the person is the one that has internet challenges.
Okay, cool, awesome. So we pass this on to Deji. I hope Deji is here.
Yeah, Deji is here. Well done, Ovo. Thank you so much. So yes, we'll let Deji talk to us a little bit about AFEX and working with Propcom McCarthy. So over to you.
Thank you very much. Nice setting the context over, and thanks for having me. It's always a pleasure to be back with Propcom. We consider Propcom family because they were with us from the very beginning in 2014 when we started. I recall our first few meetings. In fact, we had an annual retreat at AFEX today, and we're talking about when we started. The first week of AFEX in 2014, we actually used the basement of Propcom's office then in Maitama because our office furniture had not arrived when we had procured it, and then staff was resuming. So we bunked in their basement to start, and that was sort of the structure and the nature of the relationship we had with Propcom. We were at the time, had a beautiful PowerPoint. I'd just come back from trying to set up the same business in Rwanda. We had made investment on the back of the invitation by the government of Nigeria and the Minister of Agriculture and Rural Development in particular. And the job was to set up a warehouse receipt system that could unlock financing for smallholder farmers, but also to set up a commodities exchange. Fanciful, really great things to do. But the question was that what the farmer needed? And I think the first and most important part of what Propcom was able to work with us to do was to sit down with the farmer, listen to the farmer, understand what he wanted, and then start to design products that solved those problems or solved the part of those problems. And that definition was very phenomenal, and it's continued to remain one of the DNA of who we are as AFEX today, working with 300,000 fully registered KYC farmers, working with over 500 field.
Oh wow! Looks like we've
staff.
We lost you there, Deji.
So I said working with Propcom at the granular level of defining what problems we want to solve as AFEX has been very phenomenal. It's remained a DNA of us as a business. As we've grown to reach over 300,000 registered farmers that we work with directly, with over field staff across the country with 100 warehouses across 22 states, and now with a revenue of $100 million this year. So that's sort of where we've been, and that's the transformation and the catalytic effect of a program like Propcom, enabling the startup and the ideation phase of a business like AFEX. Now, in particular, when it comes to access to finance, there were a few things that we did. So the first thing was to get the farmers ready. And when I say get the farmers ready for financing, I think that's one of the biggest challenges. The first is, how do you explain the concept of credit, repayment, cost of capital to a farmer in a way that meets him where he is and he can understand and appreciate the value with analysis, and sees that if I take a loan, pay this higher price for the cost of the loan, I make 3 times more or 4 times more in incremental profits. So that was the first part: registering the farmers, having the right KYC, being able to cost share in the model of the outreach, and then to the point where it then made business sense to us, but then it was also scalable. Those things helped us get the farmers ready to receive financing. That was the first very pivotal one. The second was, then how do you then bring in the financier? Now, at this point, we couldn't lend to the farmers. We didn't have the balance sheets, the cash flow, nor did we have a license to be able to then lend to a farmer. So it was then, what's the solution? But we had listened to the farmer, and the farmer says, yes, I need access to markets, but my biggest problem is I need access to a loan to buy fertilizer to produce. If I don't buy fertilizer and CPPs and the seeds and the education, then I'm not going to be able to produce a lot. I'm going to produce a few bags. I'm not going to be profitable, and I'm not going to be able to sell to you. So the question was, how can we then create a solution? And it took a lot of effort. It was a very painstaking relationship we had with Lapo Microfinance, who was the financer for a few years at the beginning of the program. And then we're able to get Lapo the comfort they needed. And then they were able to come to the table to then start to provide financing for farmers within our network. At the peak of our relationship, I think we each got to about 10,000 farmers. And then we started having challenges because of technology adoption by the microfinance that we were working with, and the capacity to scale. So we had to then start to pivot and look at new financial solutions. We're proud today that we today raise commercial papers from capital market. We raise what we call an input note that is able to crowd in capital and then go to finance the smallholder farmers. Year to date, we finance about 78,000 smallholder farmers directly in the last wet season. And this is over, going into multiple billions of naira in terms of the total financing outlay to these farmers. But then it's not just the financing, the farmer is getting them the right input they need, it's getting them those inputs on time, it's getting them the education that they need, the support, the trust group, ensuring they have the group dynamics structured in a way that they can continually benefit themselves, and ensure that the least of them is the difference between the most experienced farmer and the least experienced farmer in each group is minimized. The third intervention that also came in the very early days is around the repo financing and how that worked. It came at a point where we then had one of the groups, National Women Cooperative, and then a few other sort of women groups that specifically needed some financing that was concessionary. This financing that was needed was below the interest rate they wanted, was below what we could get from the commercial microfinance banks we were working with. What then happened based on the intervention was that we were able to get a repayable grant from Propcom at 7%. We took this money to then lend that money, crowding additional capital from private sector, added our own balance sheet, and then provided the loans to the farmers, the education and every other thing. And that group today, National Women being one of the groups that were affected, had gone from, at the time, a 200-member group, buying about 300 bags of fertilizer, to now having over 1,000 members and buying about 3,600 at the last transaction they did of fertilizer. So phenomenal growth, phenomenal increase in income, phenomenal shift in livelihoods, around livelihoods and savings levels and households welfare. And these are sort of the things that we take pride in as AFEX, and the things that continues to unite us with Propcom and the shared prosperity that we both believe in. Today, AFEX has a finance house that is able to provide financing to both the smallholder producers, but also the large and medium, small and medium, and the larger processors. We're able to give loans anywhere from, 100,000 naira to a smallholder farmer, up until 10 billion to a very large processor, and anywhere in between. It's provided those businesses play along the value chains that we work in. So maize, paddy rice, soya beans, sorghum, or the staple crop side, ginger, cashew, cocoa, and sesame on the export crop side. Those 8 value chains, any player that operates across any part of the value chain, from production to processing to export, we're able to provide and structure financing for them using our finance house license. Today, we have a market that traded in the last season over 500,000 metric tons of commodities across it. And that's sort of one of the largest markets by value and by volume for commodities, for agricultural commodities in the continent. That's also one of the services we play. We have 100 warehouses across 22 states. And these provide storage services to farmers, but also to larger processors that want to buy these commodities and store, and then get it delivered to them when they need to use. So that's how we started. That's a support Propcom. I've played in the early days and how those products have shaped and grown till where they are today.
Thank you very much, Deji. Don't go. I'm sure people have like a million questions for you. So, Ruski, let's continue. Thank you very much. We're excited to hear. Our partnership ended a while back, but hearing the amount of progress you have made is so exhilarating and heartwarming. Ruski?
Thank you, Deji. Thank you, Ovo. So I'll be talking about our returnable grants, and in terms of why did we go into returnable grants. We identified NGOs, community-based organizations, and SMEs. We saw that they were playing an important role, linking farmers, having the experience that they're in the rural areas. They had large access to women, and they had the understanding of how to engage with them. We identified some NGOs, CBOs, and SMEs that could enhance and support those women groups to aggregate produce at a larger scale. We also felt that we needed to minimize the way intermediaries play within the aggregation space. So identifying NGOs and CBOs and SMEs to help them assume a more commercial role, we felt that was the rationale of going into returnable grants. We identified 3 people and 3 organizations: Quintessential Business Women Group, Fantosan Foundation, and Pirates Food, which is an SME. So what did we do? We provided returnable grants to these CBOs and SMEs. Fantosan Foundation was given a loan or a returnable grant of about 2.7 million to aggregate ginger. Quintessential Business Women's Association was given 9.6 million naira to aggregate shea nuts and soya beans, while Pirates Foods was given 7 million naira to aggregate acha. In addition to these grants that were given to them, there was also a lot of training and capacity building to help them enhance their capacity, their ability to commercialize and see this as a business. There were also a lot of linkages and facilitation. These CBOs, NGOs were linked to AFEX so that whatever they aggregate, they can also sell back to AFEX, being a larger organization. So that was how we did the refundable grants. What did we achieve from this? At the end of this happened between 2016 and 2017. All the 3 partners were able to aggregate about to aggregate from about 3,263 women with a net income of about 1.4 million. Over 30 metric tons of shea nuts and 25 metric tons of soya beans was aggregated in a year. Someone like Quintessential Business Women Association was able to get additional investments to aggregate more ginger within that same year of about 5 million, while as at date, based on the support and capacity building that we've provided to these groups, all the partners are still aggregating currently. I'll be moving on to talk about how we influenced equity policy of financial institutions working with Standard Microfinance Bank. We have Mr. Abraham Asongo here, who is the head of credit for Standard Microfinance Bank. So why did we work with Standard Microfinance Bank? As a part of the reasons for exclusion was institutional exclusion, and taking a case study of Standard Microfinance Bank. For instance, they require 35% equity requirement. For if you want to access a loan, you need to bring 35% equity, regardless of where you're coming from. They had a long processing. We needed to influence their policy. For instance, even access a loan, you needed to take about 2 months before you could access loans. We also wanted to see how we could bundle digital agricultural extension service. I would explain that further down. And over what spoken about our focus for the extension phase, we wanted to see how we could drive inclusion, looking at women, looking at persons living with disability and conflict-affected zones. Standard Microfinance Bank is a state licensed microfinance bank in Adamawa State, working, I think 80% of their customers are purely agri-based within the agricultural value chain. So they fit the profile of what we wanted to do. So what did we actually do? We went and piloted a reduced equity policy with agri loan that is bundled with digital agricultural extension service, just to prove that reduced equity can expand business and improve financial inclusion. How did we do this? We shared equity contribution with farmers out of the 35% that was required by Standard Microfinance Bank. We provided 25%, while the farmers provided 10% for the pilot. And we also provided technical assistance and linkages to AgTech company. So we have, so as part of PM, another of Propcom's intervention was extension, and we had an AgTech startup company called Farm Innovation. So we tried to see how that technology could be bundled into loan products. The digital agricultural extension service is basically seeing how farmers can have access to good agricultural practices, weather information, price index, market linkages, to see how, so farmers that were on part of this pilot had access to such information based on the produce they were farming. We also provided capacity support to Standard Microfinance Bank's team. And we also bundled digital agricultural extension services into what they were doing. In terms of outcome, what did we achieve? Standard Microfinance Bank as a date has reduced their equity from 35% to 15% on agri loans and 10% on enterprise loan. For the pilot, they disbursed over 466 million to 5,900 smallholder farmers and micro enterprises. Their processing time has reduced from 2 months to 2 weeks. The beneficiaries, from the impact assessment that was done, beneficiaries' average income on loan has dropped from 160, has grown from 166,000 to about 206,000, and 35% of the beneficiaries were women. So I'll hand over to Abraham to speak. Abraham will be talking to us about their rationale for high equity, why they agreed to the pilot, and most importantly, sustainability. Where are they as of today post-pilot? Abraham, thank you. Over to you.
Thank you. Good morning, Ruski, and all the panelists and participants. Greetings from Standard Microfinance Bank, Yola. I want to start by announcing that 3 days ago, precisely on 2nd of October, we got an award from Financial Inclusion Advocacy, an international microfinance organization with headquarters in UK, West African office in Ghana. This award was in recognition of Standard Microfinance Bank for championing the financing of smallholder farmers in Nigeria. So we dedicate this award to Propcom for their tremendous support to Standard Microfinance Bank. The rationale for a high equity contribution, I can say, equity contribution is a financial commitment, always calculated in terms of percentage for somebody that want to borrow from a bank or maybe lenders, I can say. Honestly, to a man on the street, the idea of equity contribution does not square up. He does not understand the reason why somebody who is looking for money to borrow is required to bring money in order to get that money. However, for a financial institution, there are rationale for that. And I'm going to mention the number one, the reason why we go for equity contribution and for Standard Microfinance Bank, we go for as high as 35% was because of, number one, fear of default. So the equity contribution is regarded as a hedge against loan repayment default. And number two, the categories of people that we deal with are regarded as high risk sector. This is because they don't have any tangible collateral to pledge. The land which they have, majorly their assets, there are no title documents for such. Their houses has no documents. So it becomes difficult for you to get any tangible assets for you to lend or collateralize. So that results to raising a little bit the equity contribution. The intervention of Propcom, just like Ruski have presented, they contributed 25% on behalf of the customers, while customers gave only 10%. Also, they link the smallholder farmers to digital agricultural extension services, which farmers were able to get information on best farm practices and also the capacity building for staff. There was a rationale why we agreed to do this pilot. This is because before the partnership with Propcom, yes, there were scores of complaints from the borrowers about the high equity contribution. There are also complaints from our field teams having a very difficult time marketing our product when it comes to the issue of equity contribution. There were a lot of submissions to the board and management, but somehow we had a difficulty getting approval to do that pilot or experiment. So we keep on pushing on marketing, yes. You go to some of the marketing events, people may say, no, that is too high. You move to another, and people will say, yes, we can go, and then we keep on going. So in 2019, we had an opportunity to partner with Propcom, and then we brought this issue up. So they agreed to pilot. And for some of us, particularly working in the business development aspect, it was actually a dream come true. We wanted to see how it worked out so that we can approach our board. So the result was quite impressive. That partnership, that pilot, we were able to finance 5,569 clients or thereabout, smallholder farmers. And a total of 422 million was disbursed today. We recorded an increase of 2,470, which is about 44% increase in outreach as a result of that pilot. Also, we are keen looking at women participation in the financial inclusion. And we recorded 15% increment of women participation as a result of the pilot. And the intervention resulted to increase in the amount that the customer were able to borrow, which in turn increased their business income. And to crown it all, at the end of the payment period, we noticed that these people that were under the pilot, we recorded 100% recovery, which we noticed that, yes, the incentive which they were to get at the end of the payment contributed greatly to the repayment aspect, and also the digital agricultural services, which gave them the best tips on farming, also contributed significantly to the repayment. So now, what are the actions that Standard Microfinance Bank took after the pilot? Number one, we reduced the contribution, that is the equity contribution, from 35% to 15% in case of agriculture, and then to 10% in case of micro enterprise loans. And we also noticed that, you know, the reason for going as high as 2 months for them to borrow was because we want them to contribute gradually, build up the 35% equity contribution from gradual savings. So we noticed that if now it's only 10% or 15%, they will be able to do that within 2 to 3 weeks. So we also reduce the number of months it takes for a first timer to borrow to 2 weeks minimum. So having seen the success of this pilot, we're more than willing to sustain this pilot so that more and more people benefit. So we have learned that high equity contribution, yes, denies many access to loans. So I also understood from the repayment that reduced equity contribution will result to increased number of borrowers, an increase in income of the bank. And then reduced equity contribution actually has no connection to loan default as we used to think before, having gone through this pilot and seen the result thereafter. So that is why we were glad to reduce it. And sustaining the pilot in 2021, this is what we have done. We have financed 8,268 smallholder farmers, which is an increase of 32% from what we recorded during the pilot. And also we have disbursed about 620 million naira, which is 36% increase from what we recorded from the pilot. And this shows that if we sustain that, more and more people will be rich financially. So as the repayment commences in next month, October, we're equally hoping that that repayment will be good and we share the result with Propcom. So far, this is the development from Standard Microfinance Bank. Thank you so much. Over to
Thank you, Abraham. We really appreciate this feedback. I'm sure people have questions. Yvonne, are there any questions you want to ask any of the panelists right now before I go into the lessons? Okay, let me just go straight to the lessons. I'll take about 2 minutes for this. I think Deji has already touched on the first point, really understanding different actors across the chain. The lack of understanding is part of the continuous disconnect between those who need finance and the financial services that are available. What we have seen working across various markets and intervention is that you need innovative financial products across, different chains. One size won't fit all. One size won't fit all. So it's important that, the financial sector continue to think about ways of innovating. What Standard Microfinance Bank has done is something we would like other microfinance banks to consider, and we intend to share some of these lessons because we've tracked that, to the financial space. One of the things that we have seen is that bundling extension services or any type of business management support to loans have the capacity to increase the productivity or the utility of that loans as well as repayment. We've also learned that not all instruments are useful. A good example, returnable grants. We had one or two of those partners that repaid completely 100%, but we found out that, it's really difficult when you've called something a grant. It's difficult for people to want to return those grants. But underpinning that, we found that there was a bit of capacity gap that we assumed was there. So it was really understanding the capacity of the partner and spending time to do that in-depth analysis to determine whether it's too risky to go in there or not. If it's a grant, then let it just be a grant. I mean, again, it's hinged on your understanding, the depth of your understanding of the partner's capacity. One important point I would like to flag is that addressing finance is not enough. Finance is just a bit, just one element of what you need when you think about competitiveness and profitability. There is the need for innovation, there is the need for innovation. There is the need for introducing technology. You know, there are multiple things that do contribute to competitiveness. There is the importance of, you know, trying out new things that will drive down your cost and improve your competitiveness. All of these things, finance alone will not solve it. So it's important to consider those factors. We've also seen, you know, one of the things we saw was the issue of whether, you know, trying to balance out financing an organization and building capacity, or running both, you know, concurrently. We've had our hands burnt, but we know that, you know, it's not enough to just finance an organization. You need to think about technical assistance required for that organization. Finally, the last point from me is that, you know, the last part on how we have approached it. I think as a program, we missed the opportunity to facilitate bigger change within the financial space because we're largely opportunistic. Maybe if we had an opportunity to live the life again, we would have, we would look at access to finance in a more systematic way and really just tackle it headlong, because agricultural development has a lot to do with how we finance and channel financing into it. Lastly, from me, we think that development actors can better channel their funding, you know, to support these types of catalytic actions that will not only expand the space, but try ideas that will drive sustainable change. Okay, we would like to take questions. Unfortunately, we only have 8 minutes to do that. Yvonne?
Right, thank you, Ovo. Of course, thank you to our partners, Deji and Mr. Abraham and Rusty as well. So we have a few questions that have come in. I'm going to read them off and direct them to the specific speaker. The first one here says, does AFEX have agri-finance products specifically targeted or created for rural women farmers or women-led agribusiness SMEs? So I think, Deji, are you still with us? And do you want to respond to that? So because we have very little time left, so maybe we'll just try to minimize how much the time we use in answering questions.
Let me just speak quickly for Deji. This is not Deji, sorry, but I'm his colleague at AFEX.
Yeah, so please introduce yourself because
okay, my name is Obianuju. My name is Obianuju Okafor. Yeah, I'm on the communications team at AFEX. And I can just quickly respond to the question that was asked by saying we don't have specific products that are created for women. What we do actually have and have had from the onset is a goal that is in our impact framework, where we basically have committed to ensuring that at least 30% of all our programs and everything that we do. So you look at count of farmers reached, but also the type of products that we structure, that at least 30% of that are meant to include women and youths. Yeah.
Okay, sounds good. Great, thank you. Somebody wants Deji's email address. Well, you can see from the slide that is showing on your screen, there's an email address that you can contact AFEX with. Right, so we have, the next question is, what about scale up? And Ovo, this question is to you. Are there any scale up opportunities?
Absolutely,
yeah,
absolutely. I was just trying to respond to Andrew. Of course, if you see the work we did with Standard Microfinance Bank started only towards the end of 2019, maybe November, December or something like that. So the entire pilot was last year. Maybe something that Abraham didn't mention, when they started, before Propcom, they were only reaching about 3,000 plus farmers with their micro loans. For the pilot, it was about 5,000. And this year, we did not invest anything in equity, and they have reached 8,000. So we see a continuous progression here. I think one of the debates we had some time ago was the fact that the issue of liquidity is going to come up very soon. So how would Standard Microfinance Bank deal with the volume of requests that is coming vis-a-vis their financial reserve So we see that, scaling up as long as other microfinance banks are willing to try out, painstakingly replicate this model. And of course, if other development partners are willing to test some of the things that we've done on finance, it's something that we would like to pass down that, that capacity on. Similar to what's going on with AFEX. The time we worked with AFEX, which ended maybe 2017, I don't know whether you're still there. The reach was probably about 30,000 or so, and AFEX has more than multiplied and grown astronomically over time. The challenge we had was the short time we had to do a few of these things, and the fact that we typically expect that the private sector will drive this going forward. And if you go and check what's going on with Babangona is on a different trail of their own. They are reaching much more farmers and all of those. So yes, you can replicate those, especially the equity policy. I think it's something that we've just scratched the surface. We only did with Standard Microfinance Bank. You can definitely replicate. Yvonne.
Right, thank you, Ovo. Andrew has a follow-up question. He says, have you found any key differences between financing needs of women and men? So
that's a question. Abraham would be able to answer that, but from the data we have, women typically engage in small businesses, petty trading. And so those that are engaged in agricultural production, the farm sizes are usually smaller, not because they don't have land. Yes, probably they don't have land, but even within the lands that they have, the amount of production is completely dependent on the finance that they have. And this we have seen particularly in the Northeast. People farm relatively small portions, but women would typically go into small petty trading where they can use 10, 20, 30,000 to fund as compared to funding 1 hectare, which is like 100,000, 50,000. But Abraham, what's your experience?
Thank you. I think you are perfectly correct. You answered it very well. The difference I can say is in the amount and then the size of business. These are the only two because normally they don't ask for much, looking at the size of the business they have. So you are perfectly correct, and I support that opinion.
Okay, thank you.
Any more questions?
Yes, somebody posted a question in the chat box. Bear with me, let me just read that out. So the question says, this is from Shehu, he says, can you summarize the peculiar innovation in ROPO funding from Propcom experience? I think he missed some part of the presentation. So it basically wants us to summarize what is peculiar, what is innovative about ROPO funding.
Okay. So we tried to mimic a traditional bond, but what we did, it's not your traditional bond. What we did was we made available capital, very low interest capital, single digit capital. And we took a risk on a startup, an innovation that commercial finance would typically not do. Babangona at the time was just starting out with their franchise model where they wanted to offer end-to-end solution, giving farmers access to premium markets for maize, certain types of maize that the likes of Nestle would need. And so we interrogated the model, the business model Babangona was putting forward, and looked at the social and economic impact on smallholders and decided to take a chance on them, knowing fully well that they needed this type of low risk capital. In order, if you give them a grant, commercial financing will still not consider that as a viable business. So we had to give them something that looked like some interest-based funds, low interest, offers them the chance to trade and work as a commercial entity, but try the idea. So it's really about testing innovation, low risk capital, where you're able to see the cash flow and the returns, and you can take that to seek for commercial finance. I hope that answers your question, but we can provide, more information offline. Yvonne?
Yes, thank you, Ovo. Yes, so that's basically it. First, I actually want to appreciate Ayodeji and Abraham for joining us today. And a special thank you to Abraham for, dedicating the award they received to Propcom. We appreciate it. Thank you very much. Before we go, I want to add that Propcom is closing this year, and we're going to be hosting a closing event. And it's going to be a hybrid event. There's going to be live streaming. So if you want to be part of the live stream of the event, please send us an email at info@propcommccarthy.org, and so that we can share the link with you in order for you to join us. The event will happen on the 21st of October. That's in about 2 weeks. Right. Also, I'm going to put in the chat box a link to a very short survey. We would love to get feedback on the webinar and feedback on our presenters. So please, send us your feedback. We would really appreciate you. The webinar recordings and slides will be available on our website in about 24 hours. So please look out for that as well. Thank you very much again for joining us. Thank you to partners who joined us today. Thank you, Mr. Abraham, Mr. Balogun. Thank you, Ruskiat, and thank you, Ovo. I don't know if anybody has any last words rather to say. If not, then we will end today's
webinar. Thank you very much for joining us. There's a lot that needs to be done within the financial space, especially in developing agriculture in Nigeria. And we think that we can channel development finance in a more strategic way to do so. And there's so many tools out there that can be used. So we encourage you to do so. And we have a few at Propcom. Feel free to go to our website and you'll get a lot more information there. And then join our closeout event, come to invest in person or virtually, and we'll be sharing more insights during those. Thank you.
All information will be on our website. In fact, the event page is there, so you can go on our website and get information on the event as well. Thank you very much, and enjoy the rest of your day.